Hello, welcome back to my YouTube channel Golden Pips by Pips and Profits. I'm Anup. I'll be analyzing chart of gold USD. So if you're watching my video first time, you can subscribe to my channel for regular updates and market analysis. So let's get started. So first look at the economic calendar. Today there's the Fomc and core PPI, and PPI data is also available. There's the high impacting data, so definitely it can impact USD pairs, especially gold. So how it may impact on these gold pairs? The PPI data, if it comes higher than the forecast, then definitely it will pump DXY further up. So I will let you know the DXY chart, and then you will come to know how it can react and up to what level it can reach. And today there the Fed decision, Fed fund decision also there at midnight around 12:30 a.m. So there the Fed fund rate decision, FOMC economic projections, FOMC statements, and at the end FOMC press conference, which will be very much effective for the gold especially and other USD pairs also. So basically DXY is forming inverted head and shoulder pattern. So as you can see, this is your left shoulder, this is your head, and this is your right shoulder, and then this is your neckline. Neckline is around 104.53, and as you know, the market has been rejected many times from this zone 104.25 areas, right? Around 2-3 times it's already got rejected. So let's see today the high impacting data, PPI and then FOMC. So if definitely PPI numbers comes positive, then definitely it may touch this zone again, and if penetrates the zone, then definitely the next zone would be 104.53 area. I'm expecting today we can see this zone at least. We can expect to touch this zone at least. So we'll just look at the gold chart first, and then we'll let you know how we can cover the gold and pips today. So there's the quick review about the gold. Today it already made the low of 1973.13, and today's high as of now 1983.6. What we did today, we have opened the positions 1974 buying positions, and the SL was 1972. Just 20 pips SL we have opened positions, and we reached up to the level of 1983 zone, and one more positions, one more set we have already opened 1978. It was given in the group, and we have running trades, 2 sets of trades we have already running in buying side, and we have opened sell positions from top, that means your 2075 zone, and then thereafter we have the positions from 2040, 2036, 2027, 2015. These are the zones where we already opened positions, and these are just for long-term trades, right? So just move for today's data. Today's as you know, this is a PMI data and as well as FOMC, so Fed interest rate decision. So we'll cover how it can impact on gold today. See, we have already opened positions here, right? So you have to hold on break even these positions. We have already booked some profits here because we have already covered around 100 pips in this trade, the 74 trade, and around this trade around 60-70 pips in the second trades. So it's around 150-160 pips is already covered. There's no need to do extra things right now. What we have to do, we have to just hold our positions with break even for today. The buying position I'm talking about, right? How market can react, what I'm expecting, market can reach up to the level of this zone. This zone is around 93-95 area. This reason market can expect during FOMC numbers, and maybe if this zone sustains, market sustains above this zone, then definitely it can test the area of 2000 nearby, right? 2000, 2003. So how we can plan our trades? So that is what I'm saying, like you have to hold your buying positions from this zone at break even, right? And selling, I'm not expecting selling here right now. Once the decision comes and after the speech and then we can look for selling from the zones. First zone will be 1995 around, and the second zone would be around 2005. This is the second area which I'm talking about, right? So we need to plan accordingly, and we need to trade safely because high impact data is available. So that is why I'm telling you repeatedly, trade safely and trade cautiously. And if you look at the FIFO levels, then definitely you can see the lower side 1811 and the higher which already made 2143 as per this chart, right? Some of the brokers, they are having 2148, some of them are 2151, so it's like that. So as per this chart I'm talking about, so the market is trading around 1981 area, right? So basically 1977 is your 50% as per your FIFO levels, correct? Market is trading around this zone. Then we can expect, definitely we can expect some upward momentum from this zone, right? Which I already said, the selling around this zone 1994 is the first zone, and the second zone would be around 2005 or above 2000 level, right? This is your as per your what do you call resistance zone, or you can say the selling area which you can expect, correct, from the zone 2005 or 2006. In between 2000 to 2005 levels we can expect a selling from this zone, but be cautious because they are the high impacting data, so we need to be very careful and trade accordingly. As you can see in the 4-hour chart, strong bullish candle, right? The formation of strong bullish candle in 4-hour, so it clearly indicates gold wants to go up, right? So let's see how the PPI comes and how market will react. Accordingly we need to take our position. As I already said, we have already positions open in buying side, so need to be cautious. We need to just hold on our positions on break even. Actually what Fed does, Fed basically measures interest rate at which depository institutions lend balances held at the Federal Reserve to other depository institutions overnight, and the frequency is around scheduled 8 times per year. The rate decision is usually priced into the market, so it tends to be overshadowed by FOMC statement which is focused on the future. And why we need to be cautious, why traders need to be cautious? Short-term interest rates are paramount factor in currency valuations. Traders look at most other indicators merely to predict how rates will change in the future. That is why FOMC members vote on where to set the target rate. The individual votes are published in the FOMC statement. So these things happens basically in FOMC meeting. The important thing is press conference after the decision. The press conference is very important for this FOMC, so we need to be cautious. Do not gamble with your capital, do not gamble with your money, hard-earned money. So just be cautious, be in the trade if you want. If you want to exit, that definitely you can. The next day you can trade if you can save your equity, right? And the long-term plan, as you can see, which I already made, I already shared in our group, which I'm expecting if market definitely moves up, then up to the level of which I already said 2005 7 zone, if we meet, then definitely we'll look for selling this zone, right? And we'll look for selling around this area for longer term. What may be the target? Already mentioned TPs are already mentioned around 1930 and 1922 around. We'll look for selling from this zone only, right? So we'll see how markets reacts, and accordingly we need to open our positions, correct? So we'll meet you in the next video. Hopefully you understand the things which I already said. So be cautious, trade safely. Bye bye, take care.